Welcome back to Trading 360. I'm Nicole Petalides. It is time for the Big Three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades is Mike Shorr, Director of Trader Education at Prosper Trading Academy. Thank you both for being with us, gentlemen, on a busy day. So let's start out with American Electric Power, a name you're watching closely. It's at $100 today. Mike, your thoughts?
Yeah, just these pullback in the energies, they've been a solid play all year, which is really, really kind of hard to find in this market. So this is going to be kind of your energy and kind of your well, I don't want to call it warmongering, but the pressures from what's happening over in Russia and Ukraine is helping with these, but they're technical plays across the board.
Understood. So watching the technical analysis, seeing the higher lows here. Ben, your thoughts on the trade here and the chart of American Electric Power?
Well, we have been seeing higher lows for the most part since the spring of 2020, but we've kind of lost some of the momentum to the upside. Let's begin with the more granular 15-minute time frame, because on this chart, you'll actually see that we had recently come off. And again, AEP shares of have come from, we're talking 105 down to 98, and they've settled into a bit of a range the last couple days from 101 down to 96. And again, for the most part, currently trading up on the day of about 0.7% here right now as we speak. But I also took a look at the daily time frame, and I saw that we've settled into a bigger picture range after recently testing this 105 level. Shares have been holding near this upper extreme range, but here you can see the daily time frame, bigger picture. Again, we're looking at 105 to 65. So that first move I looked at, again, on the 15-minute time frame, you can see, as I mentioned, from 105 down to 98. We'll call it 96 in the range, again, from 101 to 96. But here you can see, as mentioned, that's just part of this bigger picture. We are holding near the upper extreme of this range, so the bulls want to see this one break out, but we're struggling right now and meeting some resistance up here. Taking a look at the daily in terms of bringing in some moving averages, you can see we're holding above the 50. That's that blue line. We're holding above the 200 right now. And one thing I noticed, while we still have been struggling to take out that 105 level with any real conviction, again, a couple tests of that high from back in April failed here most recently in August, and then again last week. But I do want to point out, look at this, we're still up 13% year to date on this stock. So compared to the broader market here, a pretty good representation of how some of these names have fared pretty well.
Yeah.
Understood. Leg down. Look, it's true. Great chart there. What do you think, Mike?
Yeah, so I'm looking at that 50-day moving average. And so essentially what I'm doing is I'm selling a put spread to finance the call spread. So I'm actually targeting those 105s that Ben was talking about earlier. So I got the October 100-105 call spread, buying that, selling the same strike in the put, the 100, buying the 97 half put as protection. So I have a $5 wide call spread, selling a $2.50 wide put spread, against that. And so we can get into that so we kind of have 2 long delta plays here playing off of that 50. If that 50 doesn't hold, then you just have a quick out, buy back your put spread or sell out your call spread, or do both.
Yeah, and you have until it looks like near the end of October, about a month from now, right? Yeah. The timing is important, right? Right, Ben?
Absolutely.
Nicole, I looked at the weekly time frame, and kind of to Mike's point here, I mean, this stock, while it has been range bound, as mentioned, holding the upper extreme of it, 105 to 65. Look at the weekly time frame. You can see the move off the lows that we were at beginning of 2002, down around 15. A rally back. It did come under pressure back in 2009, but look at the steady trajectory to the upside. You can see some volatility associated with the pandemic ultimately, and this is really the range here, so you have to keep an eye on this, but you can see the bullish pattern playing out, again, hanging out near the upper extreme of this. I think that fares or lends itself to a retest at the very least of the upper extreme, possibly a breakout. So yeah, the bulls are looking for not only a breakout, as I say, but some consolidation in some areas of volume, overlapping rotational price activity above that level. At this point, there's still just kind of consolidating, but a little bit of optimism here as they hold the upper extreme.
Yeah.
Right, understood. Okay, any final thoughts, Mike, before we get to the next one?
No, I'm just glad Ben and I agreed.
All right, let's leave it there. Nobody's there worried. Let's leave it right there. Mosaic, $53. Your thoughts? I mean, we've seen the fertilizers. They haven't done particularly well overall. Tell me about Mosaic.
No, but we are holding right now that 200-day moving average. So I'm not looking for a breakout play here, but I am looking for some bullish momentum. And so I'm looking at a call spread. This isn't the type of play that is going to have a breakout type of move. So I'm doing an October 7th versus regular October, which is the 21st. 61 call spread. That's what the implied volatility prices in for the expected move. And then so we're not going through any sort of crazy resistance that we have to get through to get that. So that grind, even holding here, you've got the decay of that front month that we're short. That'll help us. If we get some movement to the upside, all the better. So holding that 200-day moving average in Mosaic.
Yeah, understood. And, I'll tell you, I was listening to one of the college clubs. So, they have business schools, and they were actually choosing this name. This was a name that they liked. Ben?
Well, this isn't a very similar pattern as what we just looked at in terms of AEP, some selling. As of recent, sideways consolidation for the most part. You can see the range that we've been in over the last few weeks, 57 to 50, but you can see how we've come off the 63 level. Now, this is not necessarily the best representation of what we've seen over the bigger picture, because while we see here, again, basically since the end of August, a little bit of selling down to 50.44, and how we have been sideways. Here you can see the daily time frame. For the most part, the stock has been and continues to be doing pretty well. It was trending higher into April of this year. It's kind of lost some of that momentum to the upside. The weekly, again, a little bit more representational of that bigger picture move up. But here you can see the range that we just looked at is just a small part of this larger range, 42 to 80, and similarly to AEP. In terms of bigger picture and the wider range, this is what we should be looking at. But notice how we're in a little bit of a different position, right? We always talk about the significance in the middle of the balance area and how AEP was at the upper extreme of lending itself for a breakout. Here you can see that we recently just failed around 62.50, so this is lending itself potentially for a retest of the lower extreme. I did notice here where things stand above the 50-day moving average, above the 200-day moving average. Look at this stock, another one that's fared really well, up 37% year to date. So again, compared to the broader market and some of the weakness we've seen, Mosaic has been somewhat resilient.
Right, and that's the point. And it's the resiliency of this entire market that keeps us afloat sometimes. Mike, your thoughts?
Yeah, I completely agree. If we don't hold that 200-day moving average, that's a quick out. It's this calendar is only 50 cents, so you don't have a ton of premium out there or anything like that. You can play that with a relative low allocation if you are kind of nervous about it. But the outside factors also factor into that. If you start getting bottlenecks or continued bottlenecks on the fertilizers and getting stuff around, there's not a lot of downside. There's plenty of upside to it. And that calendar is actually cheap, and it models out really well for a calendar.
Right, understood. Okay, and last but not least, turning our attention over to FANG, and this is Diamondback Energy, as we've seen oil today, right now at $83 a barrel. What are you thinking here, Mike?
So, I guess kind of the theme here is, I'm not playing any sort of growth or picking bottoms in Microsoft or anything like that, which I actually like as well. But more to the point, of three kind of separate ways with options of trading this, and you could probably put the same sort of approach to each one of this. So this one I still am in this support hold level, but now I'm selling an iron condor, but a bullish iron condor, meaning my put spread is closer to the money than my call spread, and collecting that premium. So that's what I'm looking at there. Same sort of thing, holding that 200-day moving average. Actually, we're holding the 100, at least right now we are.
Right, watching those moving averages so closely, Ben.
Well, I'm looking at FANG, and we were just looking at two stocks that have sold off and have gone sideways on the more intraday, the more granular time frame. This is almost a mirror image of. So Mosaic, AEP had sold off and gone a bit sideways. Here you can see, actually, I wanted to start with the hourly time frame because that is that mirror image, right, of the two that we had just started off talking about. Here you can see the rally up basically since mid-July from 103 up to 142-ish, and how basically the highs that we saw in the end of August, failed to get taken out here in the month of September. And so we've been a little bit sideways, consolidating around this 135 level. As I stepped away from the intraday look here and getting back into that daily time frame, a similar pattern as far as what we talked about with AEP and Mosaic. You've got a situation where this most recent area of consolidation after, the first instance, the instance of the first two stocks was to the downside and then sideways. This one to the upside and sideways. But look, it's still part of this bigger picture move that we've seen. Now, very well-defined trend up to higher here again on the daily, and stepping back here, you can see this is another one, to Mike's point, that's fared very well versus the broader market. It's at 21% year-to-date to the upside here. It's holding above the 50-day moving average, holding above the 200-day moving average. And again, directly tied to what we've seen as far as crude and some of the comments from Vladimir Putin overnight this morning, talking about this partial mobilization and ultimately how he plans to use all available means in terms of defending Russia and, against the Western world. So, this is a situation. These are a few names to watch here as this situation develops, to say the least. And while the funny thing is, crude, a big move overnight up to 86.68, I think it was. Nicole, you mentioned we're back down to 82, 83 right now, and still kind of in this $80 to $90 range right now. It's interesting as those worst-case Putin scenarios develop, how crude digests this, and then again watching these energy stocks, how they fared pretty well considering amidst all of it.
It's amazing how the market didn't react more to what was in the geopolitical turmoil of today's comments, or the comments overnight. I mean, when I hear those kinds of things, I thought those things would spook the market, but they didn't, at least for today. Focus on the Fed. I will say, Diamondback, to your point, you talked about how it's outpacing the market. I was looking, and I still see buy ratings. I see, for example, Citi has a buy and a 155 target, but if you put $1,000 in Diamondback 10 years ago, you would have $7,600 roughly, because it has been an outperformer for 10 years. It's amazing. Yeah. So it shows you. Would you put it in now, Mike, for the next 10 years?
Oh, boy. Next 10 years. I don't have anything saying that not to do that. So until that trend stops, then I guess the trend is your friend.
Yeah. Tell us more about your trade in detail, Mike.
Yeah. So I'm I'm selling slightly below where we are right now. So I'm looking at selling that 2025. That's the put spread that I'm selling. So that's kind of close to the money right now, right? We're trading 130.48, so $5 out of the money. And then I'm looking at kind of at or near the recent highs at that 45.50. At first I was looking at the 40.45, and I was like, wow, we could see a spike. So I am thinking that there is more upside potential, like you had said with Putin's comments. And really now, comments are comments, but actions have real consequences. And so that is your risk here, is having on a nice trade and being too aggressive with one side of it. So I'd rather be wrong to the downside than wrong to the upside. And so I moved that out because I really was only getting about 30 to 40 cents more for that $5 in relative terms for that lower call spread. So I moved it out there to that 45.50 range. So if we get that move, then I think we're still going to be just fine.
Yeah. You want to take some Fed guesses, Ben? Any thoughts on the market or Fed today, or how the market could react?
I'd expect to see 75. I'd be really surprised if they went with the 1% rate hike. We've seen some aggressive actions on behalf of other central bankers this week. That seems to be the trend, but it doesn't seem like the Fed really wants to spook the market right now. And this would be the third 75 basis point rate hike in a row. So I'd expect them to be aggressive, but not as aggressive as they could be. In terms of market reaction, very difficult to gauge here, Nicole. I think we need to watch rates for the most part and see how they respond to the dot plot, how they respond to the economic outlook, and that will probably dictate what we see as far as stocks. I mean, for the most part, the trend remains with rates to the upside. It's a headwind for stocks, and I would think that will continue.
Yeah, Mike, you want to take a guess? What do you think? Any final thoughts?
Yeah, I don't disagree. I don't see anything that's lending me to believe that anything other than what is already priced in the Fed funds at that 80, 82 level for meaning percentage on a 75. It's all going to be about what he says and really what we're looking at, for the rest of the year and into early 2023. We've kind of seen the good cop, bad cop, both sides of it with Powell, where, saying we got to be more aggressive. First, he was pretty soft on things, then he got more aggressive. I think that probably if he's thinking about the market, which he theoretically shouldn't be, but we know that he is. He probably, I expect more tempered language today. That's what I would expect, but you never know.
Let's see if we get, I don't know. That's interesting. More tempered language. Well, you'll be the one person who definitely said that. Mike Shorr, Prosper Trading Academy, Ben Lichtenstein. Thank you for the big three today, gentlemen. Nice to see you both. Coming up next, we're going to spotlight the cruise lines. Let's talk.